I want to talk about fossil fuels. Now, this is, yeah, I told you, no smooth gear change. You went from
That's
second to
great.
fourth. um, so basically, look, nobody likes to talk about fossil fuels. We're meant to be a world moving away from fossil fuels. The problem is the world runs on fossil fuels. And if anybody has ever researched energy transitions, they don't happen in a decade, they take centuries. Now, fossil fuels had one of their greatest years on record last year. And obviously, the Russian invasion was largely behind that. But also, too, gas prices were creeping up ahead of the Russian invasion as well over in Europe. What I want to know is, given that there is no end to demand for fossil fuels, can we see hydrocarbons repeat the performance again this year in 2023?
I don't know about repeat the performance, Shay, but hydrocarbon producer prices are cheap, despite the fact that the stocks have rallied substantially. Remember that from the depths of the COVID related transportation shutdown, the oil price has rallied from sub zero, actually, but let's call it US $20 to US $75. The companies generate a lot more free cash flow at 75 than they did at 20. There's a whole bunch of things around fossil fuels that most investors, at least the ones who read the Wall Street Journal and CNBC and you know the popular media, just don't understand. The first is that the world now in the last 30 years has spent something like $4.6 trillion on alternative energies, biomass, wind, solar, stuff like that. And with a $4.6 trillion expenditure, they have reduced the market share of fossil fuels from 82% to 81%. $4.6 trillion has led to a 1% decline in the market share of fossil fuels. You know now, of course, that we've replaced coal in the energy mix around the world, except that the leading year for coal demand in recorded history was 2022. And to suggest that the Russian invasion of Ukraine was responsible for all of the rise in hydrocarbon prices, I think diverts the blame. I think the blame is more Merkel than Putin. Angela Merkel made a strategic decision, of course, to focus on Russian gas, to the exclusion, as an example, of shale basins in the north of a place called Germany, which might be more inclined to have German interests at heart. In addition, she and her ilk decided to rely on solar, way far up in the northern hemisphere where the sun doesn't shine. One needs to ponder on the efficacy of policy decisions when one looks at energy prices. The big thinkers of the world are suggesting that peak oil demand has occurred. I believe that peak oil demand will occur about 2045. And I believe that there will be that's peak oil demand. It doesn't mean that oil demand ends at 45. That's the year that oil demand will stop rising. I suspect that we'll have another 60 or 70 years of conventional energy production. And if we enjoy 60 or 70 years at product prices on an inflation-adjusted basis, the way that we see them today, the oil and gas stocks are cheap. But they're cheaper yet because the politicians are, because of their incompetence, conspiring to assist the business. Let me explain this to you. They are decapitalizing the business. They're doing their best to keep big pension funds, big institutions from investing in oil and gas. They are telling oil and gas producers that they're going to be the owners of stranded assets. So at the same time that the big thinkers in the EU and Biden and Trudeau are telling the energy industry, you must produce more to bring down gasoline prices, they're saying we're going to put you out of business in 2030. Now, your readers need to ask themselves, your listeners need to ask themselves, Shay, how aggressive they would be in spending tens of billions of dollars to have the industry that they were spending tens of billions of dollars on go away in 7 years. The governments are constraining sustaining capital investments, which at the same time is constraining supplies, which at the same time is keeping prices higher. The margins that the industry enjoys are at almost record highs. And most of the industry is decapitalizing. Most of the industry is sending back that money to its owners, which one might expect when they're ordered to liquidate. The better players in the business, the Exxon Mobils of the world as an example, are both maintaining sustaining capital investments, investing enough money that they can maintain production, and doing share buybacks and increasing the dividends. It's difficult to see a better circumstance for conventional fossil fuels than the one that we exist in today. I need to say that if you are one who believes in an impending recession, I think it's a probability rather than a certainty. It is easy to see a circumstance where supply is constrained but demand is constrained too, and we go through a period of softer energy prices. But looking at the longer term, these stocks feel extremely, extremely cheap to me.